so many people were investing in Zoom, the Zoom we know of.
Yeah.
People were choosing the wrong Zoom,
Yeah.
Zoom Technologies.
Welcome to America, ladies and gentlemen. Yeah.
And they actually, the SEC stopped the trading because and I was like, that in and of itself is very fascinating to me, that the SEC would stop trading because people aren't educating themselves.
Yeah.
And so that really came full circle for me of, please, when it comes to money, either work with an expert and or educate yourself. And I would say and is probably a good idea. Educate yourself so that you don't make the same mistake I did.
This is BetterWealth with Caleb Guilliams. Hey everybody, welcome back to another episode of the BetterWealth Breakdown, where we break down ideas, thoughts, and quotes from around the world to help you live a more intentional life. And today, we're going to be talking about how you can avoid an 87% drop in your stock portfolio.
That's right. And I'm first going to say, I am not a financial professional. This is not, or should not be construed as financial advice, but I'm going to tell you my personal story of when I did, in fact, have an 87% drop in my stock portfolio. And this happened in college, actually. And I did what nobody should do. I went to Yahoo Finance.
Okay.
I found a stock. So a little bit of backstory. I had $4,000, and I did what I now tell people that they're not so smart for doing, and it was burning a hole in my pocket. I got to do something with it.
Yeah.
And so, as a college kid working, in IT, I have access to computers, and I'm looking at stuff, and I'm like looking at stocks, and I've seen all these charts, and everything's looking amazing. I'm going to make $1 million, and so I started looking at penny stocks. I started looking at technology stocks. I started looking at all these things. And the worst thing that ever happened to me was I looked at the 1-year target estimate on Yahoo Finance. And I found
that's thinking long term right there.
That's thinking real long term. And here's like, again, don't do this. What I did was I saw the stocks called Zoom Technologies. This is not like the Zoom that everybody knows today. This is Zoom Technologies, which was a Chinese phone company. It was actually the #1 phone company at the time. And so from what I saw, what the analyst said was this stock is the one. It was like Wolf of Wall Street style. And it was trading at like $1.15.
How are you the top phone company and you're trading at $1.15?
Hey, I don't know.
Fact check him, okay? But let's go.
Good luck with that. Well, we'll talk about that too. But so it was $1.15, and the 1-year target estimate was $8.
Oh my goodness.
So I thought, this is like jackpot. I'm the smartest person
in
the room right now. This says a year from now, it's going to be $8. Even if it's $7, this is going to be amazing.
Conservatively, it'll be $6.
So, when we talk about diversification, luckily I did, but it was in the wrong direction. I put $3,000 into Zoom Technologies, and I put $500 in a company called Cirrus Logic, which, for those of you that don't know, they design and produce all of the chips in Apple products.
Okay.
So audio chips. And so that was a great one, by the way. I think I bought that at like $12, and it shot up to $60. But unfortunately, I only had $500, and the $3,000 was on Zoom Technologies, which, lo and behold, ended up being completely liquidated because the CEO basically took all the money and ran, tanked the company, and I was floored.
Yeah.
And this happened like not too far after, I had this stock.
And $3,000 is a lot of money.
Yeah.
Especially when you're in the mindset of like multiplying it. And that must have been devastating.
Yeah. I was like 20 years old, and I just completely lost $3,000. But I would not admit defeat. So I didn't sell it. I just left it. And it actually in 2013, 2015, something like that, it was removed off the platform because it was trading at nothing. It was like 0.01, 0.02. And so I had sold Cirrus to try and like get back a little of my dignity. And this is where it gets crazy. This year, I think it was like March, when Zoom, like this Zoom, or the video conferencing Zoom, took off like a rocket.
Yeah.
They IPO'd, and then they, it's just going crazy. And somebody was like, hey, look, Zoom Technologies was going off the charts too. And I was like, oh my gosh, I made it. It all came back. Well, what happened was so many people were investing in Zoom, the Zoom we know of.
Yeah.
People were choosing the wrong Zoom,
Yeah.
Zoom technologies.
Welcome to America, ladies and gentlemen. Yeah.
And they actually, the SEC stopped the trading because they, and I was like, that in and of itself is very fascinating to me, that the SEC would stop trading because people aren't educating themselves.
Yeah.
And so that really came full circle for me of, please, when it comes to money, either work with an expert and or educate yourself. And I would say and is probably a good idea. Educate yourself so that you don't make the same mistake I did.
Yeah.
And yeah, that was $3,000, but the lessons that I learned from that completely changed the trajectory of my financial situation after that, because I became way more careful. Then lo and behold, we started talking and started teaching me some of the principles that we now teach. And that it's like those things, I have way more control now than I ever did before. And I do have that experience of this is what happened to me. And guess what? I held that stock for, I think, 9 years, 2011 to this year. And I finally sold it. I'm done. I'm out of the market.
Did you sell? Did you make anything?
Nothing at all. Yeah. I think I ended up, after all of said and done, I think I have like $200.
Okay. So there's something,
but I think that was Cirrus Logic. And I don't know.
Okay.
It's like,
so don't take stock advice from Dan. I think that's right. I think that's the call to action.
I will never recommend one. That you can be sure of that.
Unless BetterWealth goes public, which we have I have no vision of that happening. But if that's the case, you may see Dan fall in love with the stock market again. I don't know. That won't happen. But anyways, so just some things that I'm just reflecting on as you're speaking is so number one is you didn't have a ton of clarity at 19 because you were just, what were you even doing in the stock market to begin with? And
good question.
I'm saying that because there's a lot of people who are 29, 39, 49, 59 that are still, that's like they're just rolling the dice.
The result I wanted was to multiply my money.
Right.
And it just was like, it was the wrong mindset is what it was. It was like going in, it was literally playing the lottery, in my opinion.
Right.
And I had no, other than that, that's all I saw. Yeah. And so didn't educate myself.
Right.
Didn't ask anybody's opinion. It was like a part of my life where I'm still very bullish on pretty much everything that I do, but I was like, I know what's going on here.
And it's the expertise is huge. And this is one of the things that it's like, a lot of times we like to like, hey, I'm going to get into real estate and we're just going to go. But it's like, there's a difference between someone that has gone through that path and just someone who's starting. And so tuition funds are amazing. I would say you're a better operator, you're a better leader because you've experienced those things. I know I have my fair share of tuition fund. That's what we'll call it. But overall, we can laugh about it. It can be a podcast episode. So the amount of money that we're going to make by putting this podcast out is going to redeem the 3,000. And that's honestly how we think we're ultimate optimists. And we hope that this, it makes you laugh, but it also makes you think about what you're doing, why you're doing it, and maybe who you could be partnering with to elevate your expertise. So again, thank you guys so much. You can check us out at betterwealthpodcast.com. BetterWealthPodcast.com is where we are giving you the best of the best of the podcast. We're over 200 episodes. So we have some awesome interviews. We have some great breakdowns of the and asset. If you want to get to know more of the team, we have some of those as well. So BetterWealthPodcast.com is where you can check that out. And as always, liking, sharing this content really helps us get the message out. Thank you so much for listening to the BetterWealth podcast. It would mean the world to me if you could hit subscribe, leave a review, and share this with the people that you know and love.